The average cost of a data center right now is $43 billion.
There's already so much investment into AI, but there's a new incentive that's generating even more.
Because of that one big beautiful bill, there's such massive tax incentives inside of there that basically give 100% deduction to equipment companies.
Pete Carmasino with Chaikin Analytics shares the one name in AI that could really benefit from these incentives.
We have not seen a tax incentive like this, I don't think ever. It's just hard not to see the stock climbing to those levels.
He'll also share the other sectors these incentives could impact too. Let's dive in. Today, we're excited to have Pete Carmasino with us from Chaikin Analytics. Thank you so much for joining us today.
Thanks for having me.
Well, we are talking about the big topic that everyone talks about, and that's AI. But we're looking at really how the government is working to incentivize companies to spend even more on AI. Where are we seeing that happen right now?
Well, it's the One Big Beautiful Bill Act that was passed in July. And I think people had anticipated the passing of this bill. Because we started off bumpy here in 2025. We had Liberation Day and the tariff tantrum and things of that nature. But once that came under control, people really focused on these tech companies, but the tech equipment companies. And the reason is because of that one big beautiful bill. There's such massive tax incentives inside of there that basically give 100% deduction to equipment companies, and equipment companies are basically being used to build these data centers and AI chips. And when I say that, I mean it might be the likes of the Mag 7 that are potentially putting in data center deals and things of that nature. But if they need more chips need to be manufactured, and equipment that goes into making those chips is where those purchases could be 100% deductible.
That's a huge incentive, and really goes to show that the government is trying to help invest in this AI infrastructure.
Yep.
We have so much money to be spent yet, and so much of a timeline still ahead for building these AI data centers. Let's just talk about how big of a job it is to build this out. These things are huge.
They're massive. We talked about it today. We just did an earlier presentation here to folks at the conference, and I tried to use something relative. And there's a couple things. Bring up this other one. There's the golf course here at the Wynn. That's a 129-acre golf course. Well, Elon Musk has a site in Tennessee that's going to be 114 acres for his data center, just for X, the system which used to be called Twitter, for his Grok AI feature. Meta already has a 4 million square foot data center in play. The hotel we're sitting in, I should say, is 5 million square feet. That's how big these data centers are. They're not small buildings.
No, the size of a golf course. That's insane to think about how much work it's going to take to build these things out. And we know as investors, there's opportunity where all of this money is going, right?
Absolutely, and that's what's driving us to new highs. Because this isn't sort of an inch deep and a mile wide. This is a mile wide and 2 feet deep of opportunity. You've got multiple sectors in play. Utilities being one of the top sectors right now, actually the second best performer this year, if you believe it or not. You've got anything that goes into a building. Think about it. Cooling system, electrical systems, water, all the utilities that has to go into these particular systems. But data centers need to be cooled. So to run the cooling systems, you need generators and equipment and things like that. We didn't even get to the hardware and the networking components that go inside the data center. That's just for the building. So you're seeing construction and engineering firms move, utilities, anybody that supplies the construction materials that are needed to build. It's been massive. Even steel companies have actually started to do very well.
Yeah, and I know you're a part of Chaikin Analytics, and for those of you who've watched lots of times before, we've had Mark Chaikin on many times talking about the power gauge system. The power gauge system is so good at really highlighting which sectors are lighting up the most, and a lot of these different sectors that Pete just mentioned are doing that. If you scan the QR code right now or click the link we have in the description, you can get a free look at the power gauge report for one of the stocks we're about to talk about right now. But again, it's a really unique way to look at the market and really flag which stocks are lighting up as the biggest bullish momentum sectors to look at. So Pete, let's talk about this one sector before we get to that specific stock. Which is this sector that we're seeing so much momentum in right now?
Well, it's definitely the folks that make the equipment that go into anything technology related, because again, if you think about, roll the clock back 10, 15 years, cloud computing was the whole, the rage, right? Well, you can't really have AI without the cloud and the computing capabilities. And when you reach sort of the full capacity, you need more. And so data centers are basically providing the bridge to the next generation of AI. And so the equipment that goes into those is important, but the more data centers you build, more chips you need. And the more chips you need to build, you need more chip building equipment. So it just kind of a domino effect, work your way back, and you can figure out which stocks look probably poised to have the best upside the rest of this year and maybe next.
Well, let's talk about one of those names that you're looking at right now as a really strong potential candidate to continue to see a lot of growth.
It's definitely going to be Applied Materials. And this is a stock that, has had, if you look back on a 5-year, it's kind of been stagnant, so to speak. It came to life during sort of the passing of the bill, but rolled over slightly and now has started a new trend higher, hitting an all-time high, or 52-week high, I should say, this year. And I just can't see how this particular area just doesn't continue to grow if all of these deals that OpenAI and the rest of these companies are putting together materialize. We're talking hundreds of billions of dollars per deal. How about this? The average cost of a data center right now is $43 billion. That's how much it costs to build a data center. So if you're going to put that kind of money in, you want to make sure that the chips are going to be there, and AMAT sells the equipment that helps chip manufacturers make chips.
That's such a crazy number to think about per data center and how many are going up right now across the country. There's such a huge market for this and so much money going into it.
Yep.
What specifically about AMAT makes it so unique in this space?
Well, I mean, obviously, it's basically the equipment that helps chip manufacturers build the chips, right? So you're talking about, again, it gets very jargony, when you start talking about tech stock, but etching, design, and the software that actually controls the process and Applied Materials is not new to this space. I mean, they've been around for a long time. There's only a few names like this, and AMAT is definitely the leader. It's definitely the name that comes up when you start talking about the equipment needed to build chips. AMAT is really at the forefront of that specific industry.
And we're starting to see that demand for this company in the stock price. It's seen a pretty good run up recently. The question every investor has when you're talking about a stock that's already been so successful is how much more room could it have to go?
It's always hard to buy a stock that's up and to the right of the chart. And that's why I say you should zoom out when you look at any stock. At AMAT and Applied Materials, it's the same way. Zoom out, look at a 5-year, look at a 10-year if you can get a chart that long, and see exactly where it's been and what its potential is. But a lot of people say this time is different, and I like to just start to use the phrase it's unique. We have not seen a tax incentive like this specifically geared toward a specific industry, I don't think ever. And the last one that came out that was remotely close to it was probably 40 years ago under Reagan, and maybe prior to that it was probably 40 years prior to that. So you're talking about a monumental shift, and AMAT. And if we're looking at what people are saying just about AI in general, generative AI and all of the concepts and where AI can be used, I think AMAT has got at least a 50% run from here. It's just hard not to see the stock climbing to those levels. Looking at the potential, earnings will come into play and certainly guidance. So we want to make sure that we follow the name along the path of how AI is performing. But to me, 2025, the tailwind is definitely the tax incentives that are involved. AMAT's at the forefront, and this could leak into 2026 and beyond.
Now, this is a good company to talk about with that. Are there any other names or at least sectors with this tax incentive theory that you can see also benefiting?
There isn't any that aren't. I mean, that's really why we're seeing all boats being lifted in this tide, and that's exactly what's happening. That's why we're at all-time highs. It's not just one sector. Technology plays a big role only because it has a huge weight in the indexes. The S&P 500 and the NASDAQ 100 are heavily weighted in tech names. It's a capitalization cap-weighted index. So you're going to see the stocks hit, or the indexes hit new highs as the stocks hit new highs. And so other sectors, think about construction and engineering. That's a whole industry in and of itself. There are some names in that sector alone that have tripled since May.
There's a lot of growth happening in this sector.
It's massive.
And I think now is a good time to talk about the power gauge and the theory behind it of looking at these momentum stocks and choosing to invest there. There's so many different investing theories. That's what I like about talking to so many different people. Is some people say, oh, buy the dip. Make sure you're buying these stocks that might be down a little bit so you have more room to run. But there's other investors, and I think the power gauge is this mindset. When you see the momentum, that's the time to get in. So talk about that concept.
Well, this is great. So this is when Mark and I first got together about 8 years ago. He had already had the power gauge built, so it's been well over a decade since he built it. But he had, a different mindset in what he was doing. And the idea was obviously to keep it simple, and that's really a simple way to look at the stock. We rate it from bullish down to bearish. Neutral's sort of the middle of the road. But he had really married two schools of thought in the money management business. One is fundamentals, the other is technicals. But a lot of people don't realize this. The power gauge is mostly fundamentally weighted. That's just for the rating, though. When you see a bullish name, you automatically know that you're looking at a fundamentally strong stock based on the way we measure inside the power gauge. Now, this is where it gets fun because that's what you should be looking at. You should be looking at bullish names. When you should buy them is the technical side of the equation. So we wait until we have the indicators all aligned in a row. And I'll give you a great example. We don't care about the why. The why will reveal itself at some point. If the fundamentals are strong and the technicals are telling you when to buy or the time to buy is now, you pull the trigger. Great example. We just had a real estate, a home builder company that turned the corner. Things were looking great, had a bullish rating. The relative strength changed. So we recommended it in one of our publications. Lo and behold, just a few days later, the news came out that Warren Buffett was accumulating the stock and the stock popped. Now, we had no way of knowing that other than following the power gauge, and the relative strength already brought us to the what to look at and the when to buy. The why was because Warren Buffett was behind it.
It is such a great way to look at stocks and find these names as the momentum is building, to find the timing that's really well. Again, if you want to check out the power gauge for AMAT specifically, you can scan the QR code now or click the link in the description of this video. It's a free look at what the power gauge has to share about these stocks. Again, just a unique way of looking at when to buy and which stocks to look at. So thank you so much, Pete, for sharing more about this company and this is discussion on tax incentives for AI. It's a great way to look at things.
My pleasure. It's been great. Thank you.
Let us know what you think in the comments. Have you thought about all of the tax incentives going into AI, helping to kind of fund and spur on more growth here? I'd love to know what you think about that concept and maybe some other names that you're looking at that could benefit from all of this boost in AI spending and incentives as well. Let us know your thoughts in the comments. As always, everyone, happy investing.